Now, the latest Stanbic IBTC Bank Nigeria Purchasing Managers Index, that's the PMI, shows that business conditions were broadly stable at the start of 2026. The headline PMI eased to 49.7 in January, and that's down from 53.5 in December, and that's slipping just below the 50-point mark that signals growth. Despite the decline, the reading points to largely steady business activity. New orders were broadly unchanged, ending a 14-month run of growth. Output rose only marginally, with weakness centered in the wholesale and retail sector, while agriculture, manufacturing, and services continued to record growth. Employment remained positive, with staffing levels increasing for the 8th consecutive month. Meanwhile, businesses faced rising cost pressures, higher raw materials and staff costs. They pushed selling prices up to the fastest pace in 4 months. And looking ahead, companies remain cautiously optimistic, supported by expansion plans and expectations of stronger demand in the months ahead. Let's get to understand this, because we seem to see, yes, the number is below the growth level, which is 50, and yet we see some good news expansion right there in the body of the story. So let's try to understand what all of this means with Dumebi. Dumebi Oluwole is a manager at Financial Derivatives Company. Hi, Dumebi. Good morning. Thank you for joining us on the program.
Good morning, Enid.
Great. So, yeah, so we are below 50, and yet when you look at the body of the story, you see new orders broadly unchanged, ending a 14-month growth. Output rose. There was weakness around wholesale and retail, but agriculture, manufacturing, and services continue to record growth. So is this good or bad on a whole?
I mean, I will say it's good on a whole, especially because the sectors that are rebounding are job-elastic sectors. And PMI in itself is a forward-looking indicator that it gives us a premonition as to how GDP would likely behave or where GDP would likely land and the possible drivers of growth entering into the coming quarters. And from these numbers that we're seeing, it very much aligns with the cautious outlook for overall GDP growth even in 2026, where we do expect that while growth will remain positive, it will be a gradual recovery. And we expect that the services sector and agriculture will, consistently support this growth. And agriculture, which is a very interesting, story, has been a low growth sector for the past 5 years. And the expectation is that there will be a gradual, rebound in that sector, primarily driven by value addition and consistent interventions towards the sector. For manufacturing, it's almost the same story, and we do expect that that's going to continue. I think one thing I would just like to point out with the numbers is that this particular survey, it captures private sector activities, right? And more importantly, it captures the activities around small businesses. And this is a very huge pointer towards the broader scope of Nigerian economy, especially when you juxtapose it with the fact that the tax reforms are coming into play. So if at this point we are seeing that there's a likely rebound, though gradual, in smaller businesses and the private sector, this is expected to continue even when the tax reforms, come into full effect.
Well, I guess being January, we saw a taste of the tax reform. But I wonder if the impact has slipped into those numbers yet. But when we see the difference in the numbers from about 53 to 49, do we just take it as the change is mainly connected to activities, the festive season activities in December, and the change that happens? Obviously, January is more of a lean month.
Yes, very much so. Very, very much so. So typically at the start of the year, we see this lull in economic activities. Businesses are just starting to reopen. Even some businesses don't even get into full gear as of January. You begin to see much more activities, from February entering into the rest of the year. So these numbers largely reflect that economic slowdown. And of course, in December, we saw huge economic activities go on there. from consumption levels to inventory stock up to new orders. In fact, the build-up towards December started from October, where you see the PMI numbers largely retaining that expansion trend. And of course, in December, we saw the uptick to 53.5%. So I think that heading into the rest of the quarter, we will most likely see that steady increase, retaining that expansion trend. There might not necessarily be a significant spike, but I think those numbers will largely remain between 49.0 and 50 or 51.
Yeah, and talking about the Naira, we saw a huge gain, I think it was late last week, and so we saw the Naira gain to about 1,390. But now, especially in the parallel market, we've seen a slip. What's going on? Was it the intervention from the regulator last week? What's going on? What's driving it?
So there's a couple of factors, but one thing I would point out is as of last week, actually, while the official market appreciated over 2%, the parallel rate also appreciated, but just marginally by about 0.8%. The parallel rate moved from, I think, 1,490 to 1,480. And I think that beyond the interventions, right, which drove, which primarily drove the appreciation of the official rate, we have also seen that demand, right, of FX has also somewhat reduced compared to the festive period, and that in itself has an impact on how the FX market is priced, where we see an appreciation somewhat happening there. But of course, as economic activities pick up, we might see that we might see a depreciation, but not so much. The stability we've experienced from 2025 would likely continue even the first quarter of the year. But one thing to point out though is, of course, the widening spread between the official rate and the parallel rate, which is a pointer to this level of depreciation that I'm speaking about. As of January, we've seen the gap between the parallel rate and the official rate actually spread to about 7%, about 6.7%, approximately 7%, from about 3 to 4% earlier months. And what that tells us is that to narrow that gap, the official rate would likely depreciate a bit further. And if that is the case, we're still likely to see the Naira trade around 1,450 to around 1,490 in the coming months.
Yeah, we just hope we don't get to where we were, where we had that huge gap between the parallel and official market. We hope we don't get there. And then we got news that Dangote has expanded its gas supply agreement with NNPCL. How can Nigerians expect this to affect them?
Of course, I think the immediate impact of this would likely be an increase in gas supply, and primarily, gas affects consumers or affects the Nigerian economy through LPG primarily, and as such, and remember, like even in 2025, we experienced gas scarcity, and then we also experienced spikes, in LPG prices, cooking gas prices. And with this deal or with this arrangement, the expectation is that, there will be an increase in supply to the Dangote facility, which the attendant impact for the broader economy is an increase in supply of LPG, which would likely depress prices. But there are risks to this. When Dangote refinery was starting up, there was an initial agreement with crude oil supply, and I think I had a conversation even with you here, and I said the same thing, that prices would likely fall due to an increase in supply and reduced importation costs. So, of course, that risk of the deal falling flat, and we're back to a conversation where LPG prices are still highly dependent on imports, and of course prices remain high, and we could see that return of what happened in 2025. That risk is very much potent to this agreement, in my opinion, and I think it's more of a wait and see policy approach to actually, see the deal move from the signing of papers or memorandum of understanding to actual supplies, and not just actual supplies in the initial stage, but consistent supply that eventually supports production, increases supply of cooking gas, and of course depress prices, because where we want to get to is a point of stability, and of course where prices begin to consistently decline and consumers are comfortable.
Well, another area to be cautiously optimistic, if I hear Dumebi very well. Well, Dumebi, thank you so much for your time and bringing that up right there. Thanks, and enjoy the rest of your day.
Thank you for having me.